Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, March 4th, and a topsy-turvy day in the markets. An attempted rally coming off of oversold levels, but ultimately a close lower as we continue to chop down. And joining me now to discuss the day's action is my colleague, Ed Carson. Ed, what do you have for us today?
Yeah, I want to take a look at three stocks: Stride, Lifetime, and Netflix.
Okay, those I think are holding up better than most. So potentially good names for the watch list. We'll get your take. But first, let's take a closer look at the major indexes in today's session. Looking at the NASDAQ composite, down almost 0.4% on the day. It was looking like a pretty impressive upside reversal until the last half hour or so of trade. Then we faded back again. Meanwhile, the S&P 500 down 1.2% on the day, touching its 200-day line intraday. Blue chips, here's a look at the Dow, down 1.6%. Not as strong of a bounce back in the intraday trading. And the Russell 2000 down 1.1% or so, headed into the final stretch of trade here, Ed. So the NASDAQ, the least hard hit here today, but looking quite vulnerable and damaged.
Yeah, I was down more than 2% intraday, then up more than 1%, and then finished down. Importantly, it did not regain the 200-day line. So while the S&P did, and we can talk about that, the NASDAQ did not. Uh, and it's still sort of straight down. It is like even at the highs, it wasn't really breaking anything. It's way below the 10-day line. Even if we closed at the highs, it wouldn't have meant much. I mean, do you remember Friday? Friday was even more powerful of a gain, and that's just a blip. So one day is a blip. It's sort of like the worst player on the team can make a 3-pointer from 40 feet, every once in a
Right.
while. And so right now, it's just to be defensive. Wait for something real. I mean, wait for a real uptrend. This is not. Yeah, it's nice that there was some fight, but it's really disappointing that it couldn't hold the gains. So
Mhm.
it's it's a really was not just the conditions are really negative.
Yeah, totally agree. And Friday being a great example. Okay, impressive upside reversal. So, even best case scenario today, if we were to have closed at the highs. All right, well, let's see if we can string together a couple of days or, a week plus of a momentum shift. We're just not seeing that yet. And, if you look at an intraday time frame here, you can see we're just chopping lower. And what we know in weak markets, this is what it looks like. So, whether you start the day open and fade, or maybe you have an intraday comeback, you get that fade by the end of the day. That's clearly what a downtrend is, and we have not seen a shift in the momentum to the upside yet. And because of that, Ed, those who are typically tempted to buy the dip, there's danger in that. There can be a payoff like, last August, but that doesn't mean that that's what's going to happen this time around. Are we going to have a more prolonged chop or downtrend? It's hard to tell right now.
Yeah, and that's why we talk about waiting a few days, getting that follow through. I mean, not to try to get the absolute low because I mean, it may be satisfying to get that and you get a little tiny boost if it works. But, if you bought at the low, but there's all these chances where it could keep falling. You think that you've caught the lows and then you haven't caught the lows. So it's just it's just not the right time. It's no longer a chopping market where you can excuse jumping in because you just don't know. Maybe this really is it. We really are in a correction. And Chris Gessel, our chief content officer, was talking about that there was a lot of elements to a vertical violation. It might not have been classic, but you can see how it's sort of straight down almost. Yeah, there's been a couple little bounces in there, and that's partly because the news has been so whipsawy as well. Uh, but that often takes a long time, and it's probably because there's the Trump tariffs, there's AI shifts in terms of things. The market is really reassessing what everything should be, and that could take some real time.
Yeah, and there probably are still some dip buyers out there with us continuing to be in these oversold levels. But even if we get a bounce, are we then going to roll over again? We've got to be really cautious and nimble here. I think 18,000 seems like a level on the downside to watch. In addition to that 200-day line that you pointed out, which the Nasdaq closed below. And as you alluded to, let's contrast that with the S&P 500. This coming down nearly to its 200-day line for the first time in a very, very long time here, Ed.
Yeah, and that would be really disturbing because that's, this is where 401ks come in, a lot of things, you want to you want to be living over the 21-day, the 50-day line, but the 200-day line is sort of your last ditch kind of support. And so this is just something that to watch. I mean, yeah, it'd be great if it could hold this, but it might not. And it could be, sometimes that happens where it could live under for a long time. So nice that it held today, but it wasn't a particularly encouraging close as well. So I think that we're undercutting more levels, the lowest levels in quite a while, and so we just keep on breaking things. Every time it's like this could be our support level, then it just doesn't hold. And it's not holding even for much time at all. It looked like, oh, okay, at least I was thinking intraday, hey, at least the bulls are showing some fight. It's a little bit orderly here. Like maybe it won't be this kind of thing, and then to whipsaw lower again. This was positive with like 30 minutes to go in the market, and then to be down 1.2%.
Right. Very true, Ed. And I think that's what makes the next couple of days here pretty critical for the market with the S&P and the Nasdaq at this long-term support level. Where are we going to end up by the end of the week and next week too? So this is a very delicate, critical time here, I think, for the overall long-term trend of the market. And you can see just how important that 200-day line or the 40-week on the weekly chart is. The black line back in early 2022, losing that level, then hitting resistance. It took quite a while. I mean, 22 bear market still kind of fresh, I think, for some people, even though we've enjoyed some really nice gains in 2023, 2024, and to some extent, depending on how you've been able to pick your spots in 2025. But a lot of stocks breaking down and a very defensive bent to the market at this juncture. All right, well, let's move on and get quick thoughts here, Ed, on the Dow. This has not undercut its lows just yet from earlier in January, but it's not in a position of strength by any means.
No, it is not. It's looking weak. And just one point that's not related to this is just saying, instead of buying the dip, investors who like if they're still significantly invested, they might look for any bounces to get out of things.
Right.
Just again, not to say like you're sure that it's going to fail, but you're just trying to protect yourself. As David Ryan was saying on IBD Live today, your job in a bad market is to not lose money. It's
Yeah.
not to make money, it's to not to lose.
Exactly. Job number one. And yeah, you can if you can get chopped up in a choppy market, you surely can get really, really chopped up in a down market. So I mean, you and I would love nothing more for it to be all systems go starting tomorrow. Uh,
Absolutely.
but we don't have a crystal ball. So,
Yeah.
all right, let's take a look at small caps. It's been looking concerning here with this already undercutting its 200-day line, well before the test of the Nasdaq and the S&P 500 this week. And now let's see, down to levels where we were trading on the Russell back to last September.
Yeah, and this is a situation. It was already, as you said, it was in really bad shape, and so it had nothing to give. There's no areas, whereas the S&P was falling from highs, and so now it's coming to 200-day line. This was struggling mightily. It's a little bit like if you're in a bad economic situation, you don't have anything, and then you lose your job, and it's like, it's just really cascades. There's nothing there. This is just looks terrible. So a lot of damage in the market right now.
Hmm. Absolutely. Continuing to look quite weak there. All right. Next, let's pivot over to the 10-year Treasury yield. We know small caps, especially interest rate sensitive, but we've seen some changes here, right, Ed? Where even though we've seen this pullback in the 10-year yield, that has not provided much of a boost, if any, to equities here. A little bit of an upside reversal today, intraday undercutting the levels that we were seeing last winter here in early December. What do you make of what we're seeing unfold here with the 10-year?
Yeah, and I suspect that if the Treasury yield, which closes an hour earlier, if that had stayed open, I assume that would have fallen. I think you can
Mm,
imagine that electronic trading will be lower. Yeah, this is really weak. This is sign more of an economic concerns about recession or at least a much slower economy rather than the more favorable, hey, inflation's cooling a
right.
little bit. There are expectations now for Fed rate cuts, but that's again more about the economy getting weak than inflation coming down. Inflation may come down, but not in the Goldilocks situation. We're now almost the opposite, where there's a
Mm.
risk of sort of a modest stagflation. Doesn't mean it'll happen, but that's almost a worst case scenario because there's nothing really there's no good options for the Fed in that situation.
All right. Well, something I know you'll keep us informed on. Let's take a look at financials because this was an area that really until today was holding up very well in the market turmoil, but today getting hit hard with XLF down 3.2%. So a hard hit here today for
Yeah,
financials.
a lot of banks, maybe traditional payment companies, a lot of things. And we saw it outside of financials too, but definitely there were stocks that and sectors that were holding up, and then breaking down a little bit. I mean, this isn't like terrible. You bounce back tomorrow and everybody say, "Oh, financials were great. How were you you were so foolish to sell." Again, so this is why you might want to be looking just to be cutting exposure and just begin almost entirely in cash because even these good areas or
Right.
what have been good can suddenly start weakening quite a bit. And this closed pretty close to the lows.
Mhm.
So yeah, just shows you the weakness widespread, not just the highly valued speculative tech companies.
Exactly. Yeah. I mean, a potential character change here brewing. Maybe we get support at the 50-day line, but I think you're very right to point this out. A warning sign here for the sector. Let's take a look at FFTY, representative of growth stocks. We did see a close off lows here, Ed. So potentially encouraging, but a lot of damage in this area. So, you know, obviously underneath the surface individual names are going to look different. We're going to take a look at a couple, but in general it seems like there's going to need some time for growth stocks generally to repair the damage that we've seen.
Yeah, that's just really vicious damage and just huge losses. And again, those stocks that were so much fun to watch go up 8-10% on no news, those can come down 15% in a day on no news. So this is just not an environment, and it's just probably a lot of those stocks may take a long time to come back.
Okay. Well, I think the thing for investors to focus on now is while that may be true, the silver lining is we screen for stocks. We do have the ability to screen for stocks, and you're so good at this. That's why we have the show, IBD Live, all of our coverage on investors.com, because we are looking for the stocks that are standing out and bucking this weakness. So that's where you want to be focused because when the market turns, then you have your list ready to go for stocks that do have relatively good odds for leading that next turn up in the market, Ed.
Yeah, and this is more of a time to be looking for relative strength, looking for things holding levels rather than necessarily pristine bases or bases
Right.
necessarily at all. That's what people should be looking for right
Mhm.
now.
Well, with that being said, let's turn our attention to a couple of individual names that are bucking the weakness and holding up. LRN, this is Stride, a great example of taking the weakness in stride, as it were, Ed, with the relative strength line at highs. I mean, what a strong stock here.
Yeah, I can imagine in a better market or even a choppy market, swing trader type folks could have bought off of today. Oh, look at this bouncing off the 21-day line and the RS line. There are tons of ants here, like those marks. It's like suggesting that's like really powerful volume activity that we've been seeing on the way up. That's often can be a sign of a top, kind of like around that time, or a warning sign that maybe it's getting too frothy. But it definitely means that you should be paying attention to the next base. And this is not formed a base yet. It'd be great if it could just move out here, but if it can go sideways when this market is not doing very well, this could just have just tremendous relative strength. You feel like this is going to be immune from the kind of whipsaws about tariffs, good or bad, because it's like this is online education. It's probably not going to really have such an impact from that. So this is one. The earnings have been solid. It's supposed to be solid growth, going, for a little while longer at least. So just a lot to like about this name. It'd be great if it could just, yeah, again, just form that base. The volume is dried up a little bit during the pause. And it just shows seems to be acting very, very well right now. Up down volume 1.6 or 1.8, just a lot to like fundamentally and technically.
Yeah. So far, so good. And Ed, I love your reminder in previous corrections to write your watch list in pencil, not pen, right?
Yeah,
Because you can have stocks looking good one day, but if we continue to see this weakness, that could change.
yeah,
So we'll have to see maybe LRN can continue to hold up here, but that's just something to keep in mind.
yeah.
Okay, let's take a look at LTH. This is another stock with a lot of ants, lifetime holdings in the fitness area, holding support at its 21-day line, recently reported earnings, and perhaps also in the early stages of forming a new base.
Yeah, and this is a little earlier stage, from but showing real strength. The earnings are out of the way. It needs some time, but it's the relative strength line has, hadn't been on a solid run for a few months, and it had dipped before, but there had been a run before that. So it's acting pretty well here. The earnings are strong. So again, a lot to like of fundamentals and technicals. We'll see if that can form a base. There's no reason to try to jump the gun.
Yeah.
Or it just sort of like just definitely something to watch though, because I, you're looking for growth things. Again, these are going to be more defensive growth because they're maybe somewhat insulated, but they do have these are solid growth. They're definitely growth in these
Mhm.
names.
Good points there. And I know you like pointing out the up down volume, even stronger than the last one that we looked at a
Yeah,
2.1. So we like to see
very
that.
strong.
Okay, let's round things out with a look at Netflix, arguably one of the best looking large cap tech stocks here at this point, Ed. A pretty orderly pullback to the 10-week line. We'll take a closer look at the daily chart here, finding support at the 50-day and a prior buy point. So, for traders who do like buying pullbacks or seeing a little bit of a bounce after a pullback, maybe this one is also shaping up a potential entry for a market turn.
Yeah, if the market turned or just showed started showing some strength, maybe even not a full confirmed rally, but just something more than an intraday bounce. But this one, yeah, you could definitely see a trend line, the 1,000 level, the 21-day line. They're all sort of there. Again, you just need the market to go, but it does feel like this would be insulated. Like people are going to keep. It's unlikely people are going to cancel their subscription anytime soon. It just feels like Netflix is almost just on like a standard expense now. And I'm not saying it wouldn't eventually happen, but it just feels like this one is somewhat defensive in that nature. It's insulated to a certain extent, and it just has solid growth here. The growth is going to slow as some of these comparisons get a little tougher, but really
Mhm.
tremendous growth record, and the technical action is strong. But again, if this market sells off, you can see how it's testing the 50-day line. If this market sells off, it would not be at all surprising for this to break below the 50-day line. It just, I do like sometimes say, and I say it more in corrections as they deepen, relative winners can be absolute losers. We're not necessarily quite at that level yet, but we could see this stock hitting RS lines at new high, but the stock breaking down below key levels. So it's not a guarantee by any means that this will continue to hold.
Absolutely. Just because you have a strong stock and a solid uptrend doesn't mean that support at the 50-day is guaranteed. I think Amazon, a good example of that, was, of course, showing weakness before Netflix pulled back even more severely here. But there was a point where, hey, maybe Amazon can bounce off of the 50-day line. It's done it before, but there's no guarantee here. Hopefully, Netflix can do it. I'd love
Yeah.
nothing more. So we'll keep it on the watch list.
Yep. Everything's on the watch list right now.
Yep. Okay, let's check out a couple of stocks after the close with earnings, including cybersecurity name CrowdStrike. Looks like, in terms of the early reaction here, shares down 5%, Ed.
Yeah. So I haven't seen the details, but this was like right at a nice area, but there was earnings. Another one is Box that I think that one we'll see how that one's coming down because that one is sort of cup with handle. In a better market, people say, "Hey, breaking the trend line of a handle," but there's earnings. Uh, One that's
Mhm.
positive but in a little bit more damage is CRDO. This one tends to be more volatile.
Mhm.
And this one's broken down a fair amount, so it's bouncing, but not even to 60. And you can see how much has a lot of ways to go. And again, it's a market. Maybe there could be a very ugly double bottom forming,
Yeah.
but it's just right now. And we'll see how things hold. But there's a lot to do. Yeah, that 50-day line, you can see how that could potentially be that whole area could be something useful, but not there right now.
Yeah, it's the type of market where we might have to use our imaginations a little bit for the bases that are forming here
Yeah.
to see potential scenarios for how the next couple of weeks could unfold, and even then, we'll have to see what the market throws at us. Well, thank you so much, Ed. Always appreciate it.
All right.
Have a
Thank
good
you so
one.
much.
Okay, and thanks everyone for tuning in. That is it from us for today, but it is Tuesday, so make sure you tune in to Swing Trader Scorecard live at 5 p.m. Eastern today with our very own Justin Nielsen and Mike Webster. Not only are they going to discuss the market from a swing trader's perspective, but I know they also have some historical market analysis, some precedents to take a look at, which is very key for where we are right now. I love Webby's look at historical market charts to see potential scenarios for the current market that could unfold. We love studying history around here at IBD. So please make sure you tune in today live at 5 p.m. Eastern on our YouTube channel. You can also catch the recording at investors.com/videos later today. So that's coming up. And then tomorrow morning, we will see you bright and early on IBD Live starting 10 minutes before the opening bell. Ed will be your host. I'm going to be hosting Thursday. We're doing a little switcheroo this week. So Ed and the team will see you at 9:20 a.m. Eastern for IBD Live, our daily morning live stream where we will keep you up to date on IBD's perspective on market conditions and stocks that we are keeping on our radar. So we'll see you then, and then we'll see you right back here tomorrow.